You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over the head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get to Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing
It's
business.
quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits will help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
Some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, you know, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy, and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question: do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values. And one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company, and to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Good Monday afternoon from New York City and points beyond to our worldwide audience. You are listening to Bloomberg Business Week. I am Paul Sweeney. Carol Masser, she'll be joining us sometime in the 3 o'clock hour. Until then, we are joined by Bloomberg cross-asset reporter Sarah Ponczak. Sarah, thanks so much for stepping in today. How you doing?
It's great to be with you, Paul, and I know I have very big shoes to fill in the form of Carol, but it'll be a great hour. I'm looking forward to it.
Yeah, there's a lot going on here. You know, coming up, we're going to get the latest on the on-again, off-again stimulus discussions ahead of Speaker Pelosi's Tuesday deadline. That's tomorrow. So judging by today's action, the market appears pretty skeptical. Plus, we'll get our daily update on the virus and possible treatments and vaccines as well. And China, what is the latest there? Oh, and let's not forget we have an election in 15 days, is it, Sarah?
15 days and 11 trading sessions. Pretty unbelievable that we're almost there. It's almost November, if you can believe it or not, Paul.
All right, let's start it off. We'll head over to Charlie Pellet. We'll get a Bloomberg Business Flash. Charlie, what do you have for us?
Well, what we got is a down day, Paul, and nice to have Sarah with you this afternoon. We've got the Dow, the S&P, and NASDAQ very much in retreat right now at or near session lows. You pull up the GIP screen on the Bloomberg, you see the S&P down now by 0.8%, down 28 points, 34.55. The Dow is now tumbling 203 points. That is a drop of 0.7%. NASDAQ is down 81, a decline there of 0.7%. So again, to underscore, the Dow, the S&P, NASDAQ at or near session lows. Dow Transports lower, little change, down less than 0.1%. NASDAQ 100 index, by the way, down 0.9%. 10 years down 5/30 seconds. 10-year yield 0.76%. Gold up 0.3%. 19.05 the ounce. And West Texas Intermediate crude lower, little change, down now by 0.2%, down 7 cents a barrel, $40.81. Recapping, stocks lower hour with the S&P now down 30 points. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate that. You know, it's interesting here, Sarah. I think the market is just really focusing on the fiscal stimulus discussions. And again, there is a deadline tomorrow, but I don't know. It just the field doesn't look that great right here, even though the president is in fact pushing for it.
Right. You described it as on again, off again. We could probably add 4 more on agains and off agains to that.
That's right.
But it looks like, and I've gotten some emails from investors today saying that the packages that have presented still look to be a non-starter between the Democrats and Republicans, and it's just looking a bit unlikely ahead of the election.
All right, let's set the Business Week agenda here. Let's kick it off. We can do that with Gina Martin-Adams, Chief Equity Strategist for Bloomberg Intelligence. She joins us on the phone from New Jersey. And Dave Wilson, of course, Bloomberg Stocks Editor, also on the remote access from the great state of New Jersey. Gina, let's start with you here. You have a fascinating piece of research out talking about some of the underperformers and how this third quarter earnings season may be a catalyst.
Yeah, I think it can be. First, good afternoon, everybody. Welcome to Monday. A little bit of a slow Monday so far, but nonetheless.
Happy Monday.
Happy Monday. What we talked about today in our note is a basket of oversold stocks that we follow on a weekly basis. We rebalance the most oversold stocks in the S&P 500, and any given week tend to dramatically outperform over a week's time as they bounce off of very, very low levels. And what we've done in that note is highlighted that there are a few of those key oversold stocks that are due to report earnings this week. And they may have the opportunity to really change what has been a very sour tone, at least from the market response to earnings. So far, we've had tremendous reports out of the financial sector, really, really strong beats. More than 80% of companies that have reported have beat expectations, and yet the price action in response to those expectations has been negative. So we're looking for these reporters to potentially change that tone. On our short list are Verizon, AT&T, and Las Vegas fans to watch this week.
Dave, let's bring you in here because in addition to the names that Gina just named for us, we'll also hear from Tesla this week, Netflix. Sure, it's been a sour tone, but we are entering the second largest week of earnings season of the season. What are you keeping an eye on this week?
Well, I mean, it's just a matter of how forthcoming are companies going to be when it comes to talking about their prospects for this quarter or next year. I mean, certainly one of the stories of 2020 is that the coronavirus led a lot of companies to withdraw their forecasts. We've seen some of them come back. Others have been more reluctant to forecast, even if, say, their third quarter results are relatively positive. So, that's definitely going to be worth watching as we proceed through all these earnings reports due in the next couple of weeks.
So, Gina, you mentioned the banks here. What was your takeaway from the banks here? It seems like the numbers were pretty good, but the outlook was perhaps a little bit more conservative. Do you expect to hear some of that going forward with some of these other non-bank companies?
Yeah, I'm hopeful not, because I do think that that's what got in the way of the banks is, they did come out and dramatically beat expectations. As a matter of fact, at the start of earnings season, financial sector was expected to produce an earnings drop of nearly 5%. And just because of the banks that reported last week, that earnings decline is now expected to be less than 3%. So they did make a very big adjustment to expectations. All of the S&P 500 is virtually adjusting expectations higher for third quarter, but that's where the buck stops, and that's the problem I think that the market is running into is analysts are not taking the cues from an incredible beat in the second quarter, and now what's looking like a very, very strong beat in the third quarter to raise expectations into the future. And as a matter of fact, this is what we're writing about for tomorrow is expectations into future quarters have basically just been stagnant and have been for some time because analysts are not taking any sort of confidence boost out of these earnings results. Dave mentioned the guidance has been relatively limited. The guidance that we have gotten has been very strong, but it's just a handful of companies that's willing to tell us that it's very strong, and those are the companies that have been strong throughout for the most part. So we need something to change. We need a little bit more visibility to evolve, I think. If not, we're going to be sort of churning for a while, waiting for that visibility to improve into 2021, I fear.
Gina, what are the underlying signals of the market really telling us, though, at the moment? I look at the NASDAQ 100 right now, down about 1%, down for a fifth day. That's the longest losing streak since August. But at the same time, we have to remember small caps, the Russell 2000's up more than 8% this month. We've also seen some other cyclical areas of the market performing well. Can you take that and run with it as a bullish signal?
Yeah, we actually wrote about this in our chart book last Thursday, that even though the market is churning, there are some really strong signals of rotation emerging in that churn. One of them is, as you correctly identify, the small cap index. We've also seen really key constituents of industrials and technology breakout. Our automated technical pattern recognition software recognized a breakout in Caterpillar as well as Micron last week. So those are pretty strong indications of a rotation. And this has been our theme since late August, is we think the market is going through a rotation, rotating to potentially stronger earnings growers in the year ahead, as opposed to the defensive stories, which has really dominated the market's gains from the March lows. And that rotation can mean the market can churn sideways for a while. But if we're rotating into super cyclicals, we're rotating into leading indicators or leading stocks, then it probably is a pretty good sign of things to come once we've reached the end of that churning process.
Dave, real quick, what are you looking for earnings-wise? What's the big one next up?
IBM after the close. That's going to be the one to watch.
IBM after the close. We're going to have Anurag Rana from Bloomberg Intelligence. He's going to join us right after the close to kind of give us his quick take of those numbers. Gina Martin-Adams, thank you so much for joining us. Chief Equity Strategist, Bloomberg Intelligence, joining us on the phone from New Jersey. And the Dave Wilson, Bloomberg Stocks Editor, also on remote from New Jersey. We've got New Jersey covered, Sarah. I'm in Jersey as well, but you are in the studio.
I am in the studio. I must say that it's a little bit more lively in the office today, but still nothing like it used to be, obviously. We miss you in here.
That's right. Hopefully we'll get back there soon. Right now, it's time for the Bloomberg Business Week Bite of the Day, one number that tells us a lot. Today's number is 42%. Fake reviews on Amazon during the pandemic reached levels typically seen during the holiday shopping season. About 42% of the 720 million assessed by monitoring service FakeSpot from March through September were unreliable, up from about 36% in the same period last year. The surge coincided with lockdown measures as shoppers rushed online, and that's going to be a big issue as we move towards the election season and usage continues to grow. Right now, let's head down to get our world and national news. We can do that with Mark Mills. Mark, what do you have for us?
Paul, thank you. President Donald Trump complained to his campaign staff about the government's top infectious disease expert, Anthony Fauci, including him among people he considers, quote, idiots, but said he couldn't fire him because of public perception. Anytime he goes on television, there's a bomb, Trump told his staff, adding that if he fired Fauci, it would be a bigger bomb. Early voting is underway in Florida, as well as Arkansas, Idaho, and North Dakota. Parkland, Florida Mayor Christine Hunchofsky says even heavy rain isn't keeping voters away from polling stations.
I was very happy to see so many people, even in the outdoors, wearing masks, socially distancing, being really responsible.
Treasury Secretary Steven Mnuchin and House Speaker Nancy Pelosi will hold a call Monday afternoon on a fiscal stimulus package a day before Pelosi's deadline for pre-election package expires. White House Chief of Staff Mark Meadows on whether a stimulus package could get through the Senate.
There are some in the Senate that would support it. Whether there's enough votes to get to the 60-vote threshold, that's up to Leader McConnell.
Senate Majority Leader Mitch McConnell has consistently warned that most GOP senators will oppose the $2 trillion relief package that Democrats are proposing. Public health officials are sounding the alarm about the risk of COVID-19 outbreaks as people gather during the holidays. Dr. Ashish Jha, Dean of the Brown University School of Public Health, appeared on ABC's GMA.
We've seen it after every holiday. I am worried that we're going to see more of that after Thanksgiving and Christmas.
Global news, 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
Mark Mills, thank you so much. We appreciate that. More coming up on Bloomberg Business Week. So it's interesting. Let's take a look at a story here, Sarah. It's going to be very interesting when and if we get this vaccine. Who's going to take it and who's not going to take it?
Right. It's a really big question. The lead of the story is really striking. It starts off with a personal anecdote. Eddie Rice is a believer in vaccines, but then it goes on to say that this time around, he's not so sure. And what this really boils down to is just timing, Paul, because people are so astounded that a vaccine would be able to be created in such a short amount of time.
Yeah, it's interesting. You know, there is the no-vaxxers, the folks that just don't believe or in getting inoculations for their children and so on and so forth, for measles and so on and so forth. So there's that certain percentage. But then on top of that, it sounds like there's going to be another group of people, maybe a sizable group of people that, as you just said, Sarah, are going to be concerned about the safety of this vaccine, or vaccines plural, given how quickly the testing has gone. So public confidence, establishing public confidence, is really going to be a critical component here to getting this vaccine out to a large enough group of people.
It is very critical. There was a Gallup poll that showed, at least in the U.S., willingness to be vaccinated against the virus dropped to 50% in September from 66% in July. That's still a lot of people who are not willing to get vaccinated. And we will be speaking with Bloomberg's very own Sarah McBride coming up. She's actually in Pfizer's trial for the vaccine, and we'll hear all about her experiences.
Yeah, that's a fascinating story. She volunteered to be part of a trial, and there are many trials going on at the moment. You know, half a dozen plus of trials going on around the world. So the testing will be there. I think it's simply going to be a messaging issue here to get the medical community, the scientific community, to really come out and forcefully say it is safe, or, you know, it is safe, but here are some of the side effects, here are some of the possible risks. But just try to increase the percentage of people that will be looking at this.
Exactly. There's actually a study in Hong Kong that found that only 63% of nurses expressed a willingness to get the vaccine. That makes you think, who else will?
Yeah, that's exactly right. So that'll be coming up just shortly. We'll have that story. Right now, this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are off session lows, but it is a down day. Stocks are retreating for the fourth time in 5 days. Investors are assessing the latest progress towards some sort of spending assistance, a spending bill. We have got the Dow, the S&P, and NASDAQ all slipping right now, with the S&P slumping 24 points, down 0.7%. The Dow is down 168 points, down 0.6%. NASDAQ down 66, a drop now of 0.5%. 10 years down 5/32. 10-year yield 0.76%. Gold up 0.4%, 19.05 the ounce. Sam West Texas Intermediate crude up by 0.1%, up 5 cents now, 40.93 a barrel. After the bell, we'll be hearing from IBM. IBM shares, they're up now by 0.3%. Recapping, S&P down 24, down 7 tenths. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Sir, we were just talking about, testing, vaccines, treatments. We're really in that prime testing stage right now, where there's a lot of tests going on around the world. Bloomberg News venture capital reporter Sarah McBride is actually taking part in one of those tests. Let's get a real sense of what we're looking at there. Sarah, thanks so much for joining us. Tell us about what you're doing and why you're doing it.
Well, at the beginning of the pandemic, I just felt awful about everything that was happening. And the worst thing for me was how scared everybody was, because nobody really knew what COVID was, how they could catch it, where, when. So I just wanted to do something to try to help the situation. So I thought I would look into vaccine trials, and I did a lot of research online, figured out which trials would be taking place in the San Francisco area where I live, and figured out how to sign up for one of those. And it was tough, because even if you know the drug companies that are going to be testing vaccines, I learned a lot. I learned they outsource those tests to different clinics. So then you have to figure out which the clinics are doing it, and then you have to call them and get in their databases. But eventually I managed to sign up for the Pfizer trial.
So Sarah, give us some color on what it actually looks like or feels like to be in one of these trials. I mean, how long have you been in it? How often do you have to be checking in? Do you have to go in for in-person visits? What does this all look like?
Sure. So I went to this clinic in Walnut Creek, California, called the Diablo Clinic. It was very well run, lots of distancing, very kind of efficient feeling. I didn't feel like I was wasting any time, but it was a substantial commitment of time. The first time that I went was probably about 2 hours, tons of paperwork. I met with a doctor. I met with a phlebotomist. They did a COVID test, but they don't really tell you any of the results, because they don't want you to know if you're getting the placebo or the real thing. And also, they don't know. I have a patient number. All my records are somehow separated from my name. So, I asked them, do you know what I got? And they said, no, we have it all rigged up so we can't tell. And the actual shot for what was either the vaccine or the placebo came at the end of that first visit. It was very funny, because there was this, I was being led from room to room for different tests and talks with different people. And then there was a big empty room, empty except for a huge blue chair. It almost looked regal, except it looked so medical at the same time. And I sat down and they gave me my shot. I felt fine that first time. I went back for a booster shot, again, either the real thing or the placebo. 3 weeks later, that hit me pretty hard. I can't say for sure if I got the vaccine or if it was just a coincidence that maybe I got a weird bout of 24-hour flu or something around the same time, but I did not feel good after that. I've been back once more about a month after that shot so they could take blood work and so on. I imagine they're testing me for COVID and antibodies again. And then I will go back 3 more times over the course of 2 years total. So at the end of the 2-year study, I'll have been to this clinic 6 times. And I also have an app on my phone. So it's called Trial Max. I had to download it on my first visit. So after each of those shots, every single day, it would ping me and ask me, are you experiencing nausea? Is your temperature elevated? There were a bunch of questions that I would have to go through and answer on that app. Since then, it now buzzes me once a week and just asks, are you experiencing symptoms? And I'm not. So I've said no, and then there are no more questions on the app. Thank goodness I haven't experienced symptoms. If I ever do, I'd imagine the questions again would be more comprehensive on the app.
So, Sarah, do I take from this that Pfizer won't know whether this test is effective for 2 years as opposed to people are talking about weeks or months trying to get some knowledge from these tests?
No, my take, and this is just based on reading a lot of what my colleagues at Bloomberg have been reporting, is they'll have a pretty good idea. I mean, let's say that I went and had the test or had the shot, and I had the second one on September 1st. So I've already been back once. They've measured my blood for antibodies. So let's say I did get the real shot and not the booster. They already know whether my blood has antibodies in it. So I think they have a good idea. And there are 45,000 people like me across the country that have been a part of this trial. So they are getting those early results of whether the people who got the early tests have antibodies or not. They are starting to see that right now.
Right.
And so then over 2 years, they'll be checking for the people who got the real shot. Oh, do they still have antibodies 6 months later? Do they still have them a year later? Do they still have them 2 years later? So I think that part is testing how long it might be effective.
So really quick, just to wrap up, Sarah, is your sense then that the test, the study might not end for 2 years, but if there are signs that it works, they'll release it to the public before it's over?
That's what they've said that they're planning to do. And again, they'll know whether it's working right now, and then the rest of it is just to see how long it works for. And one more thing I'd like to say, that I felt really sick after that second test. So clear your schedules once you do get the vaccine, just if that was the real thing.
Sarah McBride, thank you so much. We appreciate that. Sarah McBride, she's a venture capital reporter for Bloomberg News, joining us on the phone from San Francisco. Just amazing. She is involved in this Pfizer test, and we'll just keep following this story. It's going to be fascinating. More coming up. This is Bloomberg Business Week.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, Sarah, it is Monday, Merger Monday. This time in the energy space, Conoco buying Concho, $9.7 billion.
You read my mind. I was going to say it's your classic Merger Monday today, Paul. But you have to wonder, energy, your worst performing sector today, clearly oil prices have been under pressure. Are we going to be seeing more consolidation going forwards?
We're going to chat with Bloomberg Intelligence senior oil and gas analyst Fernando Valier. He'll have some answers, I'm sure. But right now, let's go to Charlie Pellet, get a Bloomberg Business Flash. Charlie, what are you looking at?
I'm looking at shares of ConocoPhillips and also Concho. Shares of ConocoPhillips trading lower now by 1.4%. And we have got Concho moving lower by 0.8%. Again, a story we'll be talking more about coming up in just a moment. Also keeping an eye on Intel shares. They are higher now by 1.5%. Now, according to the Wall Street Journal, Intel is nearing a deal to sell its NAND unit to South Korea's SK Hynix for about $10 billion. That unit makes flash memory for computers and other devices. Again, Intel shares, they're pushing higher now by just about 1.5%. It is a down day on Wall Street, off session lows, but still down nonetheless, with the S&P down 27, a drop now of 0.8%. The Dow is down 199, lower by 0.7%. NASDAQ down 0.7, again, close to session lows for the Dow, the S&P, and NASDAQ. 10-year yield 0.76%. Gold up 0.4%, 19.06 the ounce, and crude down 0.1%, $40.84 a barrel on West Texas Intermediate crude oil. Global coronavirus cases now exceed 40 million, with the pandemic showing no signs of slowing. Record numbers of infections are rolling across Europe, with the U.S. and India averaging more than 50,000 cases a day. Dr. Joshua Sharfstein is Vice Dean at the Bloomberg Johns Hopkins Bloomberg School of Public Health, and he says there is no question that the virus and health care will be a major issue when Americans cast ballots 2 weeks from tomorrow.
Just so many cases now in the Midwest and critical battleground states in Wisconsin and Michigan. The numbers are surging. So I think it's on everyone's mind whether they're connecting it to the election or not. And healthcare is important because the Trump administration is in court trying to undo the Affordable Care Act, which supports the healthcare of millions of Americans. So it's really been front of mind for many voters.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. The pandemic is opening up jobs in at least one marketplace, with CVS Health announcing it will hire about 15,000 workers to help with flu season. CVS shares, right now, they are trading little changed on CVS shares. As for some of the other companies developing vaccines, we've got Pfizer, little changed as well. Moderna down 3.2%. BioNTech up by just about 0.7%. So again, recapping here, the Dow, the S&P, NASDAQ, all lower lows of the day now, with the S&P down by 1%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. Let's get to that M&A activity. ConocoPhillips buying Concho Resources for about $9.7 billion in stock. That's the largest shale industry deal since a collapse in energy demand earlier this year. Let's get some details. We can do that with our good friend Fernando Valier, oil and gas analyst for Bloomberg Intelligence. He joins us on the phone from New York City. So, Fernando, thumbs up or thumbs down? Do you like this deal, and why?
Hi, Paul. Glad to be here. Definitely like this deal for both, really. They're two of the premier players in the shale patch. And for Conoco, you're getting an entity that already generates free cash flow, has a lot of locations in an area, the Permian Basin, where you really didn't have any locations beforehand. And if you're Concho, you're getting an all-stock deal, so you still capture an eventual upside from an oil price recovery in the next several years. And you're getting probably one of the few companies that's been all about generating free cash flow from shale for the past 10 years. Conoco is really right-sized for a lower for longer from the 2014 oil price crash. So they came into this downturn already prepared for an eventual prolonged weakness. And so they're in really good shape. And Conoco really also helps lower the corporate declines. Remember, shale declines really quickly at first. And so Conoco, because they have exposure to LNG, oil sands, conventional, their corporate decline rates are closer to 10% as opposed to, the 30 to 40% you'd see in shale.
So thumbs up all around from you, Fernando. How does this Concho acquisition, though, change Conoco's production profile and strategy, if at all?
It doesn't really change their strategy, mostly because Concho is also being focused on more moderate growth and returns, as opposed to some of the players that were growing at 50 to 60% per annum and taking on significant leverage. The post-merger profile, they're still going to be under 1.5 times net debt to EBITDA, more so if they capture the $500 million in synergies they mentioned. So their strategy is really complementary. What it does change is that it increases Conoco's consolidated decline rate, as I mentioned. But it does so in the core of the Permian Basin, which is the premier shale basin. When you have the profile and the other assets that Conoco has, it can be a complementary play. It can be something where they don't need to grow it at 30 to 40% per annum. They can grow more slowly and really get that cash return on capital that they've been targeting for a really long time. And they need it because their Bakken position is dwindling. Their Eagle Ford position is also slowing down considerably. So they needed to grow, and the place to grow in the U.S. at the current oil price outlook is really the Permian Basin.
All right, Fernando, as a former investment banker, this is my next question. Are we going to do more deals in the shale patch? Is this just the beginning?
The beginning really was Chevron Noble, and this is by certainly not the last one, we don't think. There is a need for the industry to right size for a lower for longer or a lower forever oil price scenario. And a lot of the companies were really preparing for $65 to $70. And we just don't see that happening anytime soon. You're either looking to improve your overall drilling locations. You may have produced too much and run out of the really good stuff in your portfolio, or you could have an issue with your balance sheet. So for Conoco, they were looking for more locations. For Concho, they were looking for a really strong balance sheet, and that makes sense. Where we see an issue are the players that have both run through most of its portfolio and also have significant leverage. So we think we'll see mergers in the high-quality names, but the lower-quality, highly leveraged names, they'll struggle to catch a bid in this scenario. There's a lot of resources out there, not necessarily a lot of capital. So it's really the high-quality names that are going to be looked at.
So quick
Fernando?
one to wrap it up.
Yeah, good.
It's a quick one to wrap it up. So if we have $40 a barrel, we're really lodged here for some time. Are there any other companies out there you see as potential targets?
There are certainly companies that will look to merge, whether they're the targets or they are the consolidators. It remains to be seen, because you could see high-quality names like an EOG and Pioneer or Diamondback, Parsley Energy, look to merge together with small or no premiums to reduce costs and improve locations. So
interesting. All right, Fernando, we're going to have to leave it there, but we're going to have some more deal activity from you, I am sure. Right now, let's head down to our 1130 studios, New York. Mark Mills, world and national headlines. Mark, what do you have for us?
Paul, the Justice Department has charged 6 current and former members of Russia's military intelligence agency for allegedly carrying out some of the world's most destructive and sophisticated hacking attacks from 2015 to 2019, including knocking out Ukraine's power grid and causing almost $1 billion in damages to 3 American companies alone. Early voting has begun in many states with record turnouts by voters. Women are seen as a key voting bloc in the election. ABC News sampled opinions from a number of women voters. Here are a couple.
There just seems to be no boundaries that this man will take in order to achieve whatever greed and special interest he's in the corner of.
I'm supporting him because I feel that his base fundamentals is rooted in American history and what our forefathers wanted to build for America.
The Supreme Court will weigh in on immigration in its current term. Bloomberg's Nathan Hager reports from Washington.
The justices have agreed to consider two appeals from President Trump in his bid to use Pentagon funds to build more than 100 miles of fencing along the Mexican border through a national emergency declaration. The high courts also agreed to consider the administration's defense of its policy that requires asylum seekers to stay in Mexico while their cases are decided. Arguments in both these immigration cases aren't likely to begin until at least late February. That means Joe Biden could inherit the cases if he wins the November presidential election. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
Mark Mills, thank you so much. You know, I'm looking on the Dow Jones Newswire. There's a fascinating story, Sarah. You remember a couple weeks ago when a bunch of business leaders sent a letter to Bill de Blasio saying, hey, you got to clean up the city. You got to get things back on track here. Another group, some of the same people are now calling on for a better health care program in New York City to improve its health system, saying that the COVID-19 pandemic has really revealed a lot of the shortcomings in the city's healthcare system. So, again, another example of big business in New York trying to push for improvements in the city and its services.
Right, the private sector really calling on the public sector here, and a couple companies that are members of this group do include Bank of America, Goldman Sachs, JetBlue, but supposedly what they are really saying here is the fact that they want the city to be proactive rather than reactive, especially if we are going to be dealing with health crises as we are in the midst of one right now.
Yeah, it's interesting. The members of the partnership include Bank of America, huge employer, Goldman Sachs again, JetBlue Airways, who has a hub in, I believe, in New York at LaGuardia. They're recommending that the city develop group purchasing or local sourcing or manufacturing of hospital supplies, and that just goes back to, remember, the early days of the pandemic, Sarah, when those PPE were in really terrible shortages, and we were trying, in New York City metro areas, trying to source them from anywhere in the country. And even some local companies said, we'll start making them right here in New York City.
Right. No one could have foreseen this coming, but you have to imagine if we were more prepared, not just in New York City, but around the country, around the world, would this look very different?
Yeah, it's interesting. I think the city here has got to look at itself as it will, but I think what's interesting here is we're getting some of these private enterprise people who have big roots in the city and big investments in the city. They're saying, listen, we want to be a part of the solution, but we as a city, there's a lot of things that the city needs to do as it tries to, again, continues to try to recover from the initial COVID. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are extending losses. We are at lows of the day now. Stocks are retreating for the fourth time in 5 days as investors assess the latest progress toward a government spending deal. Here's where we stand. S&P down 44, a drop now of 1.3%. The Dow is now down 321 points, down 1.1%. NASDAQ down 133, lower by 1.1%. 10-year is down 430 seconds with a yield now of just about 0.75%. So a down day across the board for U.S. stocks. Stay with Bloomberg for the very latest in these fast-moving markets. We've got the gold up 0.3%, 19.04 the ounce, and West Texas Intermediate crude now down 0.4%, $40.70 a barrel. After the bell, we will be hearing from IBM. IBM now moving to a loss, down 0.2%. Recapping, stocks lower, S&P down 46, down 1.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pell, thank you so much. We appreciate it. Paul Sweeney along with Sarah Ponczek here. You're listening to Bloomberg Business Week. Fascinating story in the magazine here coming up. It's, just as you thought you're getting back to a little bit of normal in terms of the restaurants and going out to eat, cases, particularly in Europe, surging, putting the restaurant industry on its back foot again. Joel Weber joins us. He's editor of Bloomberg Business Week. He joins us from the remote line from Brooklyn. And Robert Vines, chief food critic for Bloomberg News. He joins us on the phone from London. So, Joel, just when our friends over in Europe, I'm seeing stories in Paris and London and other cities in Italy as well, just trying to get on their feet again, then the infections go back up. It's not good for their business, is it?
It's a story everywhere, and it's like just when you think you're like rounding a corner, cases sneak back up or surge, and restaurants in particular are the ones that have been, they've really been just like on the front lines of this. Richard Vines is the one who came to us from London to say, let's talk about restaurants here. So Richard, give us a sneak peek of kind of what's been happening in the UK and London as infections go up and restaurants are caught in the vice.
Yes, good evening from London. Well, deaths has doubled in the UK in the past 12 days. So obviously the government's rather concerned. Last month they introduced a 10 p.m. closing time for restaurants. It's quite serious. You can imagine, you go out with friends, want to eat and drink, and 10 o'clock you have to be out on the street, and that's been bad enough. But now they just introduced further restrictions. You can't eat at restaurants with people who are not in your household or in your group. So I'm single, for example. It means basically I can't go to restaurants. So quite a serious situation. I'm home. I just had dinner myself at home because where am I going to go? I'm not going down to the pub on my own.
So, Richard, I get the sense that last time around, the subsidies really helped these restaurants. But obviously, subsidies can't be too helpful if there are curfews in play or if you just can't go out and eat at a restaurant or there are higher restrictions. When you speak with restaurateurs, with restaurant owners, especially those that are more so local and mom and pop owned, what's their tone like right now? What's the feel?
The tone is of total desolation and depression, I'm afraid. Corbin and King, which is one of the big restaurant groups in London, they own a place called the Wolseley, which is known internationally. When the latest restrictions came in, they had 2,000 cancellations in 24 hours. And the British government has actually been very helpful and supportive to restaurants or to businesses in general, paying for staff who are furloughed and so on. But those subsidies are easing down now, and it looks like restrictions are coming back on more seriously. Wales is on Friday introducing a total lockdown. Scotland's introduced much stricter measures, and London, as I say, has come into stricter measures. So I'd say the mood is quite depressed. And a group of restaurateurs, chefs and restaurateurs, were demonstrating outside Parliament today, banging their pots and pans. But I don't think anyone really thinks that's going to help.
And Richard, what about the pub scene, which has been, it's obviously like a staple of English life in a way that Americans envy in probably normal times. What's that scene like now that the restaurants are closed? What's the pub situation?
Well, the pub situation is very bad because pubs usually can stay open late, and now that again first of all, the 10 o'clock closing is depressing. The thing in the UK is you can stand out and drink on the street, which you can't in New York, right? So that's something. So people can go outside with their drinks, still have a good time. But generally, business is down seriously, and pubs are closing all the time.
All right, so Richard, give us a sense as to the density issue. Like, can a restaurant be open and seat 100%, or is it 50% or 25%? Because we have some limitations here in the States.
Yeah, there are a limitation. It depends on the place and so on. But the main thing is the distancing between, in the UK, is distancing between different tables. So in Copenhagen, for example, which is another city I've been looking at, they've got a maximum of people 50 in the restaurant. Here it's more a question of distancing between tables, which means places generally can't operate much beyond 60, 70% of capacity, which, when people are spending less and then just have fewer customers and then going home earlier, of course, the numbers don't really add up.
And Richard, what about delivery? Since that's become such, like at least here in the U.S., restaurants have just gone all in on it. It is, or takeout for that matter. It's just sort of the new normal. How are restaurants managing to pivot? And is it a permanent shift, or have they found their footing in a short-term kind of way?
I think it's a permanent shift. It's really surprising some of the restaurants that are doing it. Daniel Hum, the chef from 11 Madison Park, is doing home delivery from Claridge's hotel in London, which is something that would have been completely unthinkable before the virus. And right down to neighborhood Japanese restaurants. I was speaking to the owner of one. He said they were a bit precious about their food. It wasn't suitable for home delivery, but now everyone's got to do it because people are eating at home, and this is restaurants have to get all the business they can. I think this is going to be a permanent shift, but certainly in the short term, it's a very extreme shift.
It really is amazing to see how some of these restaurants have reacted. I know in New York City, just seeing the dining on the sidewalks, which is more so relevant in Europe in normal times, but it's just amazing to watch. But I want to get your sense, if these restrictions last or if they get worse over in Europe, do you have any sense of how long the average restaurant can last? They can wait this out?
I think a lot of restaurants will announce closure in the next month or two, actually. I think it's going to be a fairly short-term thing. Restaurants in the UK had a holiday on their rents during the lockdown and so on. Those bills are all coming due now. So restaurants are trying to operate with far reduced income, no reserves, and then facing huge bills. So I'm personally very pessimistic for restaurants, I have to say. Even though I want everyone to do well, I think only the very best or the people with the biggest pockets are going to survive, deepest pockets.
Richard Vines, thank you so much for joining us. Just a fascinating piece there, and our hearts go out. We really feel for the folks in Europe that are experiencing this surge and how it's impacting their lives, including on the restaurant business. Richard Vines, chief food critic for Bloomberg News, joining us on the phone from London, and of course Joel Weber, editor of Bloomberg Business Week, on the remote access line from Brooklyn. Thank you so much for joining us. And Sarah, that's a big issue as we head into these colder months. I'm not sure how many people are going to be standing outside the pub. So it's really important for these businesses to try to get, some to kind of continue their business, but in a safe way.
Right. It's a very big question mark. One, what do restrictions look like? Also, just the weather itself, as you said. I think about dining in the city right now. These restaurants are doing absolutely everything they can, and people seem to be grasping onto it and enjoying it. But if it is sub 40 degrees outside and you have a heater, sure, still, how willing are people going to be to actually go venture outside in a coat and eat outside?
Yeah, exactly right. We're starting to get to that point in the year where the heaters are good, but
are they enough?
Are they enough here? And when we're standing out there and there's 10 inches of snow, I don't think we're going to be sitting outside on the street. But maybe some intrepid diners will. We'll see. Anyway, for those of you listening in New York, D.C., and San Francisco, and watching on YouTube, Bloomberg Business Week continues. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Sarah and I will be back. We're going to have more stories talking about the pandemic, the virus, and potential fiscal stimulus. This is Bloomberg.
World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Monday, October 19th, keeping an eye on a chip deal that may be in the works. Intel said to be nearing a deal to sell its NAND unit to South Korea's SK Hynix for about $10 billion. This according to the Wall Street Journal. That unit makes flash memory for computers and other devices. Intel shares are up now by 0.5%. The private equity firm CapVest Partners has agreed to acquire virtual data room operator DataSite. Stocks are now at the lowest in almost 2 weeks as Congress remains unable to agree on a government spending bill to boost the economy, still battered by the pandemic. Treasuries are slipping along with the dollar. Right now we have got the 10-year at 0.75%, down 4/30 seconds. The S&P is now down 52. That is a drop of 1.5%. The Dow's down 393 points, down 1.4%. Nasdaq is down 165, down 1.4%. Again, the Dow, the S&P, and Nasdaq, worst level of the day as we move into the final hour here. Gold is up $3.75 the ounce at $19.03, up 0.2%. West Texas Intermediate crude down 0.5%, $40.66 a barrel on West Texas Intermediate crude. Former Fed Chair Janet Yellen says the pandemic needs to be controlled to get the economy back on track. Yellen made the comment this morning in an interview with Bloomberg Television and Radio.
What heads my list is dealing more effectively with the pandemic, with the health-related issues, getting the infection level under control through contact tracing, testing, isolation of people who have it. I think we need a much more effective effort than we've had.
Yellen also says while consumer spending has held up, American savings are running out and state and local governments are facing huge budget shortfalls. More than 1 million people passed through U.S. airport security checkpoints yesterday. Airline stocks, for the most part, are higher. UAL up by 3.9%, American up by 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
I am Paul Sweeney alongside Sarah Ponza. Carol will be back later this hour. Sarah, it's really interesting here. First, Jack Ma brought us Alibaba, the huge Amazon-like type company. Now he brings us another company called Ant Financial. It is winding its way through the regulatory process on its way to an initial public offering. A lot of people don't know that much about Ant Financial, but one person who does is Andy Brown. He is editorial director for Bloomberg's New Economy. He joins us on the phone from New York City. Andy, thanks so much for joining us here. It looks like this IPO might happen relatively soon. I wonder if you could just tell us what is Ant Financial and how big is this thing?
So Ant Financial is huge. You can think about Ant Financial, as The Economist put it in its latest edition, as a combination of Apple Pay, PayPal, Venmo, MasterCard, JP Morgan, iShares with an insurance brokerage thrown in. Okay?
So just a few small entities.
It's a block, and it's all, by the way, in one single app. So Ant is going public at the end of this month, and it's going to be the biggest IPO in history, way bigger than Saudi Aramco last year, $30 billion or more, which would value the company at about $280 billion, bigger than any single U.S. bank except JP Morgan.
So, Andy, as you wrote recently, data wars are the new trade wars. Clearly, as you just described, Ant has so much consumer information. Do we expect, or already have we seen the U.S. administration want to go after the likes of Ant, just as we saw earlier this year, which I think we can call it the TikTok saga?
Yeah, this is really a battle for the digital future of the world. Chinese companies are scooping up massive amounts of data, personal data, everywhere. So you think about this, Ant Financial in China it grew out of a payments system, Alipay, this ubiquitous payments app that has 700 million or more Chinese users. So basically, Ant knows everything about the spending habits of pretty much everybody in China. And they're now doing these joint ventures with companies around Asia, India, Thailand, Philippines, sort of retrofitting. They're buying into companies, retrofitting them with Ant technologies. And so they have a lot of insight into the data of about 1 billion or more people now around the world, and could easily double that number inside 5 years.
Andy, what's the relationship between the U.S. government and financial? I mean, there's got to be a lot of concern there.
Yeah, so essentially it's put into the category of national security risk. So Reuters has reported that the U.S. State Department under Mike Pompeo is trying its best to derail this listing. So it has proposed, according to Reuters, that Ant should go onto a blacklist, this entities list. It would have only symbolic importance. It's not like Huawei, which is really completely dependent actually on U.S. technology. In this case, on Ant, it would be largely symbolic, but it would make the listing, it would definitely complicate this listing. It would put a cloud of uncertainty around its global expansion. Don't forget, the U.S. is not the only country in the world that's worried about China getting control over data. Europe has concerns. India, by the way, also banned TikTok, not just the U.S.
And as you said earlier, this really is a race for digital dominance around the world. I wonder, though, not even just the U.S., as you said, but other countries, how much sway, how much teeth do they actually have? I know Bloomberg Opinion described the TikTok deal as a, quote, empty threat once we saw it finally finished and through and President Trump had approved it. How much can other companies, or other countries, I should say, actually do?
I think it really does depend on the company, one, and number two, it depends on their level of dependency on U.S. technology. But also, I think a lot of it really depends on an overall assessment of Chinese risk. The problem that the private sector in China face is that they are seen as essentially handmaidens of or enthralled to the Chinese state. I mean, private companies have an explicit mandate to serve the state. That's fine domestically insofar as it gives them access to privileged capital, to protected markets. When they go overseas, they're trusted about as much as they're as good as the Chinese state. And as we've seen from Pew surveys just in the last week, levels of trust around the world towards China are plunging.
So, Andy, this could be a big issue because I know Ant's big in obviously China. They're looking at India. What are their U.S. plans and strategy, given TikTok, given everything that's going on?
Yeah, well, see, so this is the big difference, where you have TikTok, which really took the U.S. by storm. I mean, it's tens of millions of active users. Ant Financial actually has almost no business in the U.S. unless you count Chinese travelers that are coming over to the U.S. and using Ant to access financial services back home. So, they made a big play in 2018 to get into the Chinese market. They wanted to buy MoneyGram, and CFIUS, the agency that, vets foreign acquisitions in the U.S., turned that down. So that was a big U.S. play, which was completely derailed by the U.S. government.
Andy Brown, thank you so much for joining us. We appreciate it. Andy Brown, he's the editorial director for Bloomberg New Economy, joining us on the phone from New York City. And Sarah, this is going to be interesting. This is going to be, as Andy was just reporting, is going to be potentially the biggest IPO on record. And this company is just extraordinary. It was once a part of Alibaba, just to give you a sense of just how big Alibaba was before they spun this Ant Financial off.
Right, and Alibaba does still own a third of Ant after spinning it out. But like you said, we think about the hype that was really surrounding Saudi Aramco when we saw that IPO. Imagine, once this does go public, how much attention this is going to get across financial markets, not just in Hong Kong.
Yeah, and it's going to be interesting. Again, as we're talking to Andy Brown about this, the relationship, the trade relationship, the tensions between China and the U.S., it played out. We saw it play out in TikTok. I'm not really sure where we ended up there. But this is a company that is even more strategic from both Chinese perspective and perhaps from the U.S. perspective that might warrant some, closer oversight by regulators around the world. We'll have to see, but it'll be a fascinating deal. Right now, let's head to Mark Mills. Let's get world and national headlines. He's in our Bloomberg 1130 studio. Mark, what do you have for us?
Well, Paul, we got 6 Russian military officers who sought to disrupt through computer hacking the French election the Winter Olympics, and U.S. businesses, according to a Justice Department indictment that was unsealed Monday. Early voting getting underway in Florida, as well as Arkansas, Idaho, and North Dakota. Parkland, Florida Mayor Christine Hunchovsky says even heavy rain isn't keeping people away from polling stations.
I was very, very happy to see so many people, even in the outdoors, wearing masks, socially distancing, being really responsible.
Treasury Secretary Stephen Mnuchin and House Speaker Nancy Pelosi will hold a call this afternoon on a fiscal stimulus package, a day before Pelosi's deadline for a pre-election package expires. White House Chief of Staff Mark Meadows.
He hasn't been reaching out to individual senators because we haven't been close enough to actually look at the merits of the deal.
Senate Majority Leader Mitch McConnell has consistently warned that most GOP senators will oppose the $2 trillion plus relief package that Democrats are proposing. Public health officials are sounding the alarm about the risk of COVID-19 outbreaks as people gather during the holidays. Dr. Ashish Shah, Dean of the Brown University School of Public Health, appeared on ABC's GMA.
If you want to see other family members, there's a set of steps you can take, from really keeping yourself quarantined for a couple of weeks going in, limiting the number of people, working on ventilation inside. It's not going to be an easy holiday season.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
Mark Mills, thank you. Mark Mills, thank you so much. We appreciate it. You know, Sarah, when the PPP was announced and they were talking about rolling billions of dollars out to American citizens, the public, through direct payments, getting cash into the hands of consumers, boy, one of my first thoughts, luckily not the first thought, but one of my first thoughts was cybercrime is going to have a field day with this, and it looks like that's in fact what happening. I saw a Nigerian cybercrime ring was recently unearthed, and talking about $1 billion in fraud. It's been flagged in New York alone. So some of the concerns I think a lot of folks have in terms of cybercrime, cybersecurity are coming true.
Right. The hoops that some are jumping through to get their hands on this money. And as you mentioned, a Nigerian cyber crime ring. Can you imagine that? But yes, so what this story does read on the terminal, very, very well read. It says unemployed Americans aren't the only ones waiting for the next pandemic relief check. Remember, that stimulus check has not yet been approved, but fraudsters are also getting ready for this. And supposedly at least 11 states are now seeing an increase in fraudulent unemployment insurance activity, which is pretty amazing, but also just startling to see. And you think about the infrastructure that the states have had to dealing with getting so many unemployment claims out to people who truly need them, but also keeping fraud in the back of their mind as a risk.
Yeah, and the story goes on to report, you know, that the increase in fraud is driven largely by the rush of legitimate claims coming in and the pressure of state governments to get benefits out as soon as possible. It's not a good combination. Plus, there's so much personal information out on the dark web as a result of major security breaches. It's just kind of a perfect storm coming, if you will.
Right, and you say legitimate claims, and that is what's so important. There are true, legitimate claims, people who really, truly need this money, and you just hope that fraud doesn't spiral out of hands to the point where you're gonna see some who just can't get the money into the hands of those really need it.
Yeah, and again, the numbers were just huge. $2.2 trillion in the original CARES Act, going to tens of millions of people, you know, very ripe for security issues.
experts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are close to lows of the day. Let's head right over to the first word, a breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks under pressure amid stimulus and virus worries. Dow's currently down 400 points. S&P's dropped 55. NASDAQ is lower by 177. The U.S. 10-year yield at 0.76%. Gold trading higher by 3. And transports drop 130 points. Among the main 11 S&P sectors, all were in the red, led by declines in telecom and tech. Note that AT&T fell for an 8th day. And in the Dow, only Intel was in the green, while Microsoft, J&J, and Disney led to the downside. After earnings, Halliburton revenue missed estimates. And in deal news in the energy space, Conoco to buy Concho Resources for $9.7 billion. Wrapping things up, IBM reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to be here live, breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. You're listening to Bloomberg Business Week. I'm Paul Sweeney. Be joined by Carol Messer in just moments here. Savings are running out for unemployed workers, and more fiscal policy is needed to support the economy. That's according to former Fed Chair Janet Yellen, who spoke with Tom Keene and Lisa Abramowitz on Bloomberg Surveillance. The conversation ran from monetary policy to politics and, of course, the pandemic. Let's listen to part of that conversation now.
In August, it was reported that you'd had conversations with the Biden-Harris camp about how to fix the economy going forward. Can you share anything from what you think we should do to get the economy back on track from here?
Right. Well, let me say that I did meet with Biden and Harris and brief them about financial sector issues, but I'm not working with the campaign. But you asked me what I think we need to do to get the economy back on track. So I would say what heads my list is dealing more effectively with the pandemic, with the health-related issues, getting the infection level under control through contact tracing, testing, isolation of people who have it. I think we need a much more effective effort than we've had. And if we have that, it'll be good not only for health, but for being able to open up the economy. And we've seen that in countries ranging from Germany to Korea to China that have been successful. And then we need support for the economy, both for monetary and fiscal policy. And monetary policy has already done a huge amount. Fiscal policy response in the United States has been extremely impressive, but actually it's much larger, the fiscal support, than what was done after the 2008-9 financial crisis. But the fiscal support has now lapsed. And so far, spending has held up. Unemployed workers who got that extra $600 a week through the end of July, they use that to stay current on their bills, to support their spending. They even stash some of it away so that they've been able to get through this last couple of months and pay their bills. Yeah. But it's running out, and I think we need to do that. And state and local governments also face huge budget shortfalls. I'm working on a task force with the governor of California to address the pandemic. They face a $54 billion shortfall this year. I think that's very important, too.
Chair Yellen, we are rebuilding our institutions out of this natural disaster. I want to go back to James Tobin a few years ago, who you took your PhD with, where he introduced with Nordhaus the measure of our welfare system, just simply thinking about the welfare state within a capitalistic market. We now come up to where we are now with this historic election, and we've got the Democrats trying to get back to some form of social construct, and Mr. Trump and others players with a Lockean individualistic nature as well. How do you perceive how we move forward with our new capitalism, our new welfare state, given the fiscal deficits, given the trade deficit where it is, and given a monetary theory that seems to be extended and exhausted? What does the new system look like for you in the next few years?
So that's a very hard and comprehensive question, but I would say that I think fiscal policy needs to play an active role. Once upon a time, starting in the 1980s, there was a view that the Fed can handle the job of keeping the economy operating at full employment, and fiscal policy should focus on allocative issues. And now we're faced with a world characterized by secular stagnation. There is a surfeit, too much saving in the global economy, especially among developed countries, and weak investment demand. And it's been pushing down real rates of interest and depriving monetary policy of a lot of the ability it had to address economic weakness. And I would never have imagined when 2008 crisis hit that short rates would stay at zero for 7 full years. And here we are back again with zero short rates. And of course, there are unconventional tools, asset purchases, forward guidance that expand what monetary policy can do. But there are some limits. And it's important for fiscal policy to fill in that gap. And I believe while the pandemic is still seriously affecting the economy, we need to continue extraordinary fiscal support. But even beyond that, I think it will be necessary. But a good side of low interest rates is that it reduces the interest burden of the debt. And I think it makes it possible, and it's not a short-run phenomenon, short rates. It's something that's going to probably be with us for many years to come, and we can afford to have more debt than we used to think was sustainable.
That was Bloomberg's Tom Keene and Lisa Abramowitz speaking with former Fed Chair Janet Yellen, getting her thoughts on fiscal policy, monetary policy as it relates to this economy in a pandemic world. What we heard from former Fed Chair Yellen is that the Federal Reserve has done a yeoman's job, but fiscal stimulus is likely going to be needed. We'll have more coming up. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we are going to chat with our good friend Bloomberg Stocks editor Dave Wilson, get his chart of the day. Plus, we're going to take a look at markets with Michael Cugino, president of Permanent Portfolio Family Funds. That's all coming up. But first, let's go to Charlie Pellet, get a Bloomberg Business Flash. Charlie, how's it going?
We've got 28 minutes to go ahead of the closing bell, Paul, with the Dow, the S&P, NASDAQ all declining. A story we're keeping an eye on. Intel said to be nearing a deal to sell its NAND unit to South Korea's SK Hynix for about $10 billion. This is according to the Wall Street Journal. That unit makes flash memory for computers and other devices. Right now, we are looking at shares of Intel, chip makers for the most part higher right now. Intel on a down day for the rest of the market. Intel up 0.8%. Micron is up now by 2.2%. Western Digital surging by 8.2%. So an update for a lot of chip makers. Global coronavirus cases have now exceeded 40 million, with the pandemic showing no signs of slowing. Record numbers of infections are rolling across Europe, while the U.S. and India are averaging more than 50,000 cases a day. Dr. Joshua Sharfstein is vice dean at the Bloomberg Johns Hopkins School of Public Health, and he is concerned about this spike in cases.
Clearly, there's pandemic fatigue. Clearly, there were some restrictions were relaxed quickly. And I just think in general, the weather is probably not helping because it's driving people indoors. And that's why we're going to get a wave. That is exactly what's happening now. And the question is, how big a wave are we going to get? And can we get control of it?
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Well, the pandemic is opening up jobs in at least one marketplace, with CVS Health announcing it will hire about 15,000 workers to help with the flu season, coronavirus testing, and possibly administering COVID-19 vaccines. Shares of CVS, they are trading lower now, down by 1.1%. Down day, close to the worst level right now, with the S&P slumping 52 points, down 1.5%. We've got the Dow down 380, a drop there of 1.3%. NASDAQ is down 176, a decline now of 1.5%. 10 years down 430 seconds, the 10-year yield 0.76%. Stocks falling to the lowest in almost 2 weeks as Congress remains unable to agree on a government spending bill to boost the economy. Gold is up by 0.3%, 1904.01 the ounce, and West Texas Intermediate crude down 0.5%, 40.67 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. You are listening to Bloomberg Business Week. It's not coming to me. Bloomberg Stocks editor Dave Wilson, it's not coming to me.
Well, that's unfortunate.
That is unfortunate. I feel like I should know this song.
Well, you mean you probably know the performer, but we should point out that this is a solo venture by that performer. Much better known for the group he's a part of.
All right.
Does that help?
No, and I think I'm speaking for most of our listeners when we're stumped on this one.
You've heard of the Rolling Stones, right?
Yes, okay.
All right, Keith Richards in a song called Struggle from a solo album he put out back in 1988. So
Well, you forget about that one. I forget about
yeah,
that. Okay, good one. That's good.
It occurred to me because, you got this struggle going on in the markets that today's chart captures. And what it is, it's a struggle in terms of the relationship between volatility indexes that track the NASDAQ 100 and the S&P 500. So what we're talking about are the option-based indicators from Cboe Global Markets that trade on their tickers are VXN and VIX. So in other words, you have seen the relationship between these two indicators way out of whack with historical norms this year, and it persists, as Michael Purvis over at Tallback and Capital Advisors wrote in a report on Friday. You look at what was going on in March when things were really kind of falling apart in stocks, and you had the gap between the NASDAQ 100, the VXN volatility index, and the VIX. at a record low. And in fact, it wasn't usual to see the NASDAQ VIX, in essence, the VXN, lower. I mean, historically, that really hasn't been the case. Right. And then you turn around and, within a few months, we get to September, and this same gap is the widest in favor of those NASDAQ options with the VXN since 2003. And you're kind of closer to the top than the bottom at this point. And what it comes down to in Purvis's view, why the NASDAQ 100 options are relatively expensive is captured by this index comparison. It has to do with demand tied to earnings reports, so, potential gains from that. And then on the other hand, you got people concerned about the potential for losses and hedging in the options market. So when you put the two together, that's why things have not come back to what you would call a normal relationship. And the chart really does capture what that relationship looks like and how the extremes have played out in the past several months. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dave, I'm looking at the VIX right here in honor of Tom Keene, who loves to quote the VIX. It's we're just below 30 here, 29.14, up 1.7 big points, as Tom would say here. But I guess the market is saying, okay, on the one hand, we've got all this tremendous amount of liquidity with rates extraordinarily low. That's my bull case. But the bear case is, boy, the pandemic numbers are not going in my favor.
No, absolutely. I mean, you think about a number that close to 30, given how close the S&P 500 is to a record, it goes to show you that's kind of out of whack, too. You look back historically at times like this, you might see figures half that or even less. I mean, I can remember periods where the VIX was consistently below 10, and now we're pushing 30. Clearly, it's a different sort of scenario playing out here. And remember, the VXN at this point is even higher. That's what the ratio is showing here. So, it goes on, basically. I mean, the VXN above 36 right now.
Interesting. And then people are saying, gee, do I stick with my value, or do I stick with my big growth techie names, or do I try to get smart, look to the other side of the pandemic and rotate into cyclical? I'm not feeling that today. I think people are going to say, the numbers just aren't trending in the right direction in terms of the pandemic.
This is the sort of back and forth that's been playing out for some time, and you see it in stocks, and you also see it in these volatility gauges.
Bloomberg Stocks editor Dave Wilson, thank you so much. We appreciate that. Looking at the markets here, yeah, just a tough day. They've kind of weakened throughout the day here. Looking at the S&P off 1.44%, the Dow off 1.3%. That's 364 points, 28,239 on your Dow Jones Industrials. And the S&P, the NASDAQ, that's off 1.4% as well, 165 points, 11,505 on that. So again, the market's really concerned here that doesn't appear that a fiscal stimulus package can be delivered by tomorrow, or up for a vote for tomorrow, which is what Speaker Pelosi had demanded. Right now, let's go to Mark Mills in our 1130 studio, get world and national headlines. Mark, what do you have?
Paul, President Trump complained to his campaign staff about the government's top infectious disease expert, Anthony Fauci, including him among a group of people he considers, quote, idiots, but said he couldn't fire him because of public perception. Anytime he goes on television, there's a bomb, Trump told his staff, adding that if he fired Fauci, it would be a bigger bomb. New York Governor Andrew Cuomo says the federal government's top health agencies have lost their credibility.
The CDC and the FDA doesn't have any credibility. You have Dr. Fauci now saying that they basically tried to muzzle him. He has the highest credibility in the nation.
K Street is buzzing and bracing over the prospect of a win next month by Democratic presidential nominee Joe Biden. Bloomberg's Amy Morris reports on lobbyists from Washington.
Dozens of companies and trade associations are putting together their strategies for a potential Biden administration, looking at how to defend their clients from a possible resurgence of regulation while marrying their priorities with Biden's expected focus on stimulating the economy, expanding health care, and overhauling corporate taxes. For the first time since 2008, lobbyists are planning for a possible sweeping change on Capitol Hill and the White House. In Washington, I'm Amy Morris, Bloomberg Radio.
A federal appeals court ruled that the state of Texas doesn't have to notify voters when local election officials reject mail-in ballots, in a setback for voting rights activists. The decision blocked a trial judge's order requiring Texas to give all voters the chance to confirm their identities if their ballot is rejected because their signatures don't match what's on file. Global news 24 hours a day on air and on Bloomberg's Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Mills. This is Bloomberg.
All right, Mark, thank you so much. I'm Carol Massar. I'm here along with Paul Sweeney. It's been a busy day.
I was going to say, you've been busy today, running all over the place.
Well, I have, and I just got off doing a 60-minute panel at Milken, and it was all about global real estate. It was actually entitled In the Eye of the Storm, and it was the CEO of Kane International, Jonathan Goldstein. He's based over in the UK, and he does a lot of deals, obviously, in the UK and in Europe. Richard Mack, co-founder, CEO of Mack Real Estate Group, very well known here in the US. David Warren, CEO and CIO and founding partner of DW Partners. So really got into the structure of deals and credit versus equity and so on. And then Xin Zhang, she's co-founder and CEO of Soho China. She is really credited with creating the office market in Beijing. And so we got a global perspective, Paul, on what's going on in real estate. And the consensus is it's probably another 6 to 9 months of this environment until we get out of it in terms of real estate. And they said we're kind of still in the middle of the storm, and maybe next summer is when we start to see things get a little bit better. But, you know, real estate, as you know, location, location, location. So not all hospitality is bad. Some of the extended stay places are actually doing well, you know, versus anything that was, you know, related or tied to tourism has obviously taken a beating, or the business traveler, right?
Yep. Yeah, and the question is, you know, when and to what extent will the business traveler come back, as they're some of the most lucrative passengers for the airlines? And I was wondering, Carol, did they have any consensus on the future of our great city of New York?
That, you know, listen, there's a lot of conversations about 9/11 specifically, and said we really thought a lot of people there'd be an exodus, and we maybe did see some of that, but the city came back even stronger than ever before. So the feeling is, and it was interesting, a lot of the folks on the panel have, you know, kids who are either teenagers or in their young 20s, and they're like, this is where they want to be. They want to be in those major cities, whether it's London, whether it's New York. And so while we might see a little bit of an exodus right now, you know, you can anticipate that, you know, folks will be coming back. So some really wonderful insight. So hopefully we'll get to play a little bit maybe on tomorrow's broadcast. You're listening to Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. With the Dow, the S&P, and NASDAQ all declining. A spending aid deal is elusive. Stocks selling off. Right now, we have got the S&P 500 index close to the low of the day, down 53. That is a drop of 1.5%. The Dow is now down 381 points, a decline there of 1.3%. NASDAQ is down 175 points for the NASDAQ Composite Index. That is a drop now of 1.5%. 10-year is down 4/30 seconds. 10-year yield 0.76%. Gold up $4 the ounce at $19.03, up 0.2%. West Texas Intermediate crude is down 0.6%, down 23 cents a barrel at $40.65. After the bell, we will be hearing from IBM. IBM shares lower now by 0.3%. Recapping stock slump, S&P down 53, a drop of 1.5%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, so just got about 11 minutes, Paul Sweeney, left in today's trading session, and I feel like almost from the get-go, it's just been like a rock slowly falling, right, going down the hill.
Yeah.
We're just off our lows, but nonetheless, we're pretty much near it, down about 1.5% on both the S&P and NASDAQ, down about 1.33% on the Dow Jones Industrial Average. Let's bring in Michael Cugino. He is president and portfolio manager at the Permanent Portfolio Family of Funds, approximately $2.2 billion in assets under management, and he joins us on the phone from San Francisco. Michael, it's good to have you back with us. How are you?
Not bad, Carol. How are you doing? It's been a while in person, so it's great to be on. I had a thought listening to the montage on driving songs before this segment started. You guys got to add Gary Newman here in my car.
I will let
Going back to the early '80s, my age demographic. So.
I will definitely let our producer Paul Brennan know that. You guys are doing well. You're a permanent portfolio fund in the 92nd percentile for funds in its category of the past 5 years, and you're up, I guess, around 7% on average annually in each of the past 5 years. What's working right now in this environment? I mean, we know big tech has worked really well, those FANG stocks. What are you finding is working well for you guys?
Well, broadly speaking, we tend to do better when markets are mixed and environments are mixed. And, the last couple of years, it's begun to be a more mixed picture than maybe the better part of the last 10 years, which was, buy S&P 500 and buy long bond funds and buy an index and you did great. And so, I think the next 10 years are probably going to look different. And as a result, I think the markets have started to reflect that. What's worked for us so far this year has been, I would say the growth stocks, have come back very strongly in a variety of industries for us. We were buyers in February and March. We were also buyers recently in September, although not as great. We were nibbling in a lot of areas that we felt got oversold in the sell-off, as well as some, structurally sell-off areas like energy and materials and some of the cyclical growth that really has lagged, while also continuing to hold some of our tech. And so that's worked well. I mean, natural resources have, they've begun to show some improvement, but they have a long way to go. REITs, similar with all the issues on the economy coming out of COVID and what's going to happen with entities that own assets that need to rent space, whether it's residential or industrial or office or, retail. And bonds have been a slight contributor for us. We've been, low duration, high quality. We've found some opportunities in the short-term investment-grade credit markets. So we've also gotten some contribution from bonds there.
Hey, Michael, how about on the precious metal side, gold, silver? I'm looking at gold here, back up above $1,900 an ounce. How are you viewing that right now?
You guys like gold, Michael, right?
Yeah, you know what? And I get into the stocks and bonds and didn't neglected to mention the precious metals.
Because isn't like the number one holding? Isn't that the number one holding in your fund?
Gold is, yes. So I mentioned industrial metals and materials, but the alternative currency side of things, the gold and silver have obviously worked for us. And I think there's a variety of reasons for that. I mean, you have negative real interest rates across the curve, starting with the 30-year and in, and even worse globally. So that's U.S., and they look even worse when you look at rates around the world. You have the uncertain environment with respect to COVID. You have the uncertain recovery, the duration, the length, the strength. The employment picture's mixed. You got a lot of headline risk with respect to the election right now, and then what comes after that. And so, and COVID really overrides it all, given that we've never been through this. We've never shut down the country before and then tried to bring it back up. And it's going to be 2 steps forward, 1 step back, which we're not surprised by, but that's it. That is, in fact, what's transpired, and we expect that to continue. While it should gain momentum given pent-up demand, slack in labor, slack in capital, I mean, all those things argue for a continued momentum growing situation when we get a vaccine, when we get a viral, or just if we get herd immunity or something like that. So, there is an end to all this, and it's going to be uncertain until we get there. And since we've never been through it before, I really can't trust anybody's predictions about what's going to happen, and that's a big risk factor for investors.
But it's a vaccine, right? Ultimately, I mean, I don't think we expect herd immunity to fix this, so it's stay safe until we get a vaccine, essentially, right?
Well, that would be the one with the most certainty. But again, we're dealing with a lot of unknowns here. And I know people like to say trust the science, but from my perspective, science has been all over the place. And it's probably been just as useful to use common sense, social distance, be smart about how you're interacting and where, as pure reliance on any sort of science. I mean, I've seen so many contradicting studies over the last 7 months that it's hard to know what works today versus a month ago. But I think when you use common sense and social distance and use your head, you can accomplish a lot. You're not going to eliminate the risk, but you can minimize it. And I think the best way would be a vaccine. The most certain way to sort of snap your fingers and go would be a vaccine.
Isn't it amazing, Paul? We didn't talk election. How did we not do that?
15 days, right?
Yeah. So, Michael Cugino, does it matter to you who ends up in the White House? I'm not talking about your political preferences, but in terms of the financial markets.
Understood. I think in the short term, no. There's pent-up demand in the economy, so regardless of who wins in the short term, they're going to look like a hero in terms of economic recovery. And both sides appear to want stimulus at some level, whether it's before the election or after. And so from that standpoint, you have, some alignment. What happens is after that, once that sugar high of the initial recovery, the pent-up demand, all of that stuff begins to subside, then you have very different policy prescriptions that really kind of coalesce around more government spending, and that's going to drive economic growth. On the Biden side, or more private sector spending, less regulation, on the Trump side of things. And then it gets into philosophical issues, whether which one you believe is better long term, which one do you believe is going to give you the better rate of return. And, there's a lot of evidence, smart people can construct cases all over the map on that one. I think the other factor would be that how is Congress made up? We tend to focus a lot on the presidency, but the makeup of Congress, who owns which houses by what majority, is also going to be an issue. So that matters. And I think investors generally have been so wrapped up in the personalities, the headline risk, et cetera, that I sense a lot of people haven't focused on policy yet. And that may need to be done or need to be better priced in going forward.
All right, Michael Cugino, thank you so much. President and Portfolio Manager at Permanent Portfolio Family of Funds. Say that 5 times fast. On the phone from San Francisco. Stick around. We've got the closing bell in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, October 19th. Folks from Kiva.org ringing that closing bell. Stocks fell to the lowest in almost 2 weeks as Congress remained unable to agree on a government spending bill to boost the economy, still battered by the pandemic. Treasury slipped along with the dollar. Here's where we ended the session. S&P down 56, a drop of 1.6%. The Dow down 408 points at the close, down 1.4%. NASDAQ down 192, a drop there of 1.6%. So after 3 winning weeks, Wall Street gets back to work with a losing session of the 10-year, down 430 seconds, 10-year yield 0.76%. Gold, higher little changed, up 0.1%, 19.01 the ounce, and West Texas Intermediate crude down 0.7%, $40.59 a barrel on West Texas Intermediate crude. Well, as for the overall market backdrop, Michael Cugino is the president of the Permanent Portfolio Family of Funds.
You know, it's going to be 2 steps forward, 1 step back, which we're not surprised by, but that's it. That is, in fact, what's transpired, and we expect that to continue. Well, it should gain momentum given pent-up demand, slack in labor, slack in capital. I mean, all those things argue for a continued momentum growing situation when we get a vaccine, when we get a viral, or just if we get herd immunity or something like that.
Intel is said to be nearing a deal to sell its NAND unit to South Korea's SK Hynix for about $10 billion. This, according to the Wall Street Journal. That unit makes flash memory for computers and other devices. Intel shares did advance today by 0.8%. Micron among the chipmakers up by 2%. Western Digital surging by 7.85%. One of today's stock standouts, shares of AMC movie theater, going to be opening theaters in New York and Long Island. Again, recapping equities lower. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking. Let's do it.
On Bloomberg Radio.
Yes, indeed. Time to take a look at some of the stocks on the move, some of the sectors on the move. It really was out of the gate. We just kind of tumbled lower, pretty much finishing just off our lows of the session. So big picture here, Carol Massar along with Paul Sweeney, Sarah Ponzek, Bloomberg News cross-asset reporter. You heard her earlier on the broadcast. She went away. She came back. So she's going to talk a little bit more about the trade today. Let's do big picture, though. S&P 500, it was definitely broad-based selling. 454 names in the index, lower today, 46 higher, 5 unchanged. And Sarah, 11, the major industry groups, there are 11 of them in the S&P. All of them were down. Best performing utilities, which is always kind of a safer play there, potentially. Information technology down 1.9%. Energy, bottom of the pack, down 2%. But it was just across the board.
It was across the board. And I'll give you some statistics to really put this in perspective. Worst day for the S&P 500 since September 23rd. That was the last day of that correction that we experienced. Also, the NASDAQ has now been down 5 straight days. That is the longest losing streak since August of 2019, which is pretty unbelievable that you think about all that we have gone through this year, the amount of volatility, and this is the longest losing streak of the year.
Can I just tell you, though, the NASDAQ's still up 28%, so take that, Sarah P.
Take that. Well, look, you really have to put it all in perspective. That's exactly the point.
It's crazy.
Right. The NASDAQ has had an unbelievable run this year.
Yeah.
These companies have really just been crushing it. Many of them have benefited. If you look at what's expected for earnings, tech companies are not expected to see losses nearly the size of other companies across the benchmarks. And we will get a view into that soon. Netflix kicking us off tomorrow.
Yeah, that'll be a big deal.
Yeah, it's interesting. We had Gina Martin Adams on earlier, Carol, and she came out with a piece of research which was really interesting, but just basically saying, you know, we had a lot of the companies beat earnings, even raise estimates, stocks trading down. She was citing some of the banks, you know, so it's kind of interesting. She's trying to say, hey, you know, the market's not really interested in good news right now.
Right. As of last Friday, We had seen a record beat rate just about for S&P 500 companies reported earnings, yet we had seen declines of between 1.5% to 2% in the days after they had reported. So even though you're seeing these unbelievable relative numbers, very important to keep that in mind. These are relative to expectations. You're not seeing it show through to share prices. And like you said, the Nasdaq's up 28%, but at the same time, you think about the comeback that we have seen for so many companies this year and the risks that still remain. There's a lot of question marks.
I just did a real estate panel, and I was looking at, last night doing some prep, and just looking at REITs across the board, whether it's office, whether it's retail, whether it's single family, multifamily. And it's interesting, we know everything fell off a cliff, but so much has bounced back as a result. I do feel like so much of the trade, Sarah, here was stimulus.
Yes, there's a lot of talk about stimulus right now, or lack thereof, exactly. And as Paula and I joked earlier today, on and off, on and off, on and off. How many times do we have to repeat it? But right now, it does seem, at least speaking with investors, that there is this belief that stimulus is likely not going to come to the fore ahead of the election. That means how long do we have to wait? Do we have to wait until 2021 to get that cash
Vince
flowing?
Signorella thinks it's March, and I know other people think it's March. You got to get a new administration in there, and right?
Right, it could be a very long time, but it's also a bit questionable because I'm not so sure that this is a market that is fully pricing in stimulus this year. It seems like when you speak with portfolio managers, investors, a lot of people have kind of come to the conclusion that we likely won't see it this year, that we see still a gap between the Democrats, Republicans, the White House.
Because we don't need it, or they just don't think it'll be there?
They just don't think it'll be there. Not necessarily that we don't need it, but if we actually get that headline, whenever it may come, that we do get it or that we don't get it, has the market already priced that in?
Yeah, it's interesting. I'm just looking at the S&P up 6% year to date, but as you mentioned earlier, the Nasdaq up 28. That tells me the market's saying I'm just sticking with my top line growth stories. I just don't have the confidence to bet on an economic rebound, which could then move my cyclical portfolio. And again, in the absence of any I guess, Sarah, in the absence of any fiscal stimulus, at least in the near term, it's better to stay with the safer, high-growth tech names.
Well, that's exactly what has been the narrative this year. If you don't believe that we are going to see strong growth in the United States, then you stick with growth companies that are high growers just themselves. But we have seen a change in recent weeks. Sure, the Nasdaq was your underperformer today, but this week, you look at the Russell 2000, for example, not this week, this month, up more than 7%, whereas the Nasdaq is up less than 2%. So we have seen this reversal take hold in the past couple of weeks. The idea that we might see mean reversion, we might finally see that gap between growth and value reconcile. But the issue is we've seen so many head fakes before that people question, as long as COVID-19 is still here, how can you truly believe that this one is the real one, that this is the start of something new?
If ifs and buts were candy nuts, we'd all have fun at Christmas. This is when I say that. All right, Sarah Ponczek, thank you so much. Bloomberg News cross-asset reporter in our Bloomberg Interactive Broker Studio. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson! Hey, Mr. Wilson. Stock of the day, ticker is TSE. What do you got?
That's right. It's Trinzio, Carol. That's a supplier of plastics, latex, and synthetic rubber. The company was part of Dow Chemical under the name Styron before a 2010 buyout by private equity firm Bain Capital. Trinzio adopted its current name and went public in 2014. And yes, as you mentioned, the ticker TSE. The shares peaked in January 2018 and ended the year with a loss, as they had last year. And this year, they sank as much as 62% through mid-March. Now, Trinzio has recouped most of the 2020 loss. The rebound accelerated today after the company put out preliminary third-quarter results. Trinzio said net income was as high as $109 million, which beat the average analyst estimate in the Bloomberg survey by more than 50%. The company said profit margins were higher than in last year's third quarter, and sales volumes were similar. Trinzio also said it saw a strong recovery in demand from the appliance, auto, and construction industries. All this lifted the company's shares to their highest price since January. At one point, they were up more than 12%, closed with a gain of 8.5%.
Nice gain, considering the overall selling we saw, right, in the market. So, all right, David Wilson, thank you so much. What was the song today, just quickly?
Oh,
What I missed?
Struggle by Keith Richards.
Did you get it? You didn't get it, Paul.
Not a chance.
Sorry.
The Rolling Stones solo track. Come on.
I'm going to teach Paul how to Google. All right, got to run. Dave Wilson, thank you so much. All right, let's get back to World and National News headlines. Let's get to Ed Baxter in San Francisco. Hey, Ed.
Carol, President Donald Trump has drawn a thick line between himself and science in a call with staff calling Dr. Anthony Fauci a disaster.
People are tired of hearing Fauci and all these idiots.
Idiots he's referring to, he says, are the scientists. This leading New York Governor Andrew Cuomo on ABC.
The CDC, George, and the FDA doesn't have any credibility. You have Dr. Fauci now saying that they basically tried to muzzle him. He has the highest credibility in the nation.
And saying that coming up with a vaccine distribution and vaccine trust is now very difficult. Being echoed in California, where it's setting up its own monitoring system, Governor Gavin Newsom says steep challenges in distribution.
Moderna and the Pfizer each require different storage, each require different distribution strategies. These are two examples, ultra cold storage and then simply cold storage, 20 degrees below Celsius, that ultimately, again, require a unique challenge.
He stopped for a second and said, just imagine getting that much dry ice to try to disseminate them. He says no chance of on or before the end of the year mass distribution. Meanwhile, in Chicago,
folks, make no mistake, this is the second surge that Dr. Fauci and Dr. Arwady have been warning about since March. We are now in it.
Mayor Lori Lightfoot says the city will do whatever it needs to prevent more spread. That includes closing businesses down. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Ed Baxter, thank you so much. So TikTok, 2 weeks away from the election, we're going to talk a little bit deeper into kind of what's chief from the campaign trail and what needs to be kind of on the minds of voters at this point. But there's a couple stories. This is actually, Paul, the most read story on the Bloomberg terminal today. It has to do with a botched mailing to New York voters last month and how it has kind of shaken confidence that reforms that were enacted by New York State after a chaotic primary have been sufficient to ensure a smoother election. And apparently, I guess, as many as 100,000 ballots went out in September in New York with return envelopes imprinted with wrong names. And then that's a problem because voters can't sign an envelope bearing someone else's name. Yeah, that's a problem.
Yeah, that's a problem. Coincidentally, I just dropped my ballot in the mailbox yesterday, so I'm all done and dusted. And it was actually a very easy form, easy process, straightforward. I kind of felt like, gee, for once it looks like Jersey got something right here. So we'll see how if it actually gets to its intended location. But this is something that President Trump has been talking about since kind of the beginning of the campaign.
Yeah.
The validity of these absentee ballots and everything, calling to question the election before it even occurred. So you get stories like this, and it just provides folks that align themselves with that argument maybe a little bit more ammunition. But presumably the vast 99% plus will work well and will work efficiently and securely to give confidence in those votes.
Yeah, so something, we can talk, though, a little bit about with Jeannie Zaino. She's coming up.
Yes.
But there's another story, too, we might throw into it because it talks about how the COVID-19 pandemic is hitting disproportionately affecting some of the crucial voters 2 weeks before election dates. So we're talking about key states and demographics 2 weeks out from the vote. And this will, potentially, depending on how much, people are upset about the handling of the virus, whether or not it affects their vote. So we'll see. We'll talk with Jeannie about that, about how much that might play into the voter outcome. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Do want to begin with a developing story out of Ireland, where Ireland says it will close most stores, bars, and restaurants as the coronavirus spreads. The Irish Prime Minister says for 6 weeks, Ireland will move to a new lockdown. The country's Prime Minister says construction and manufacturing will continue, but again, repeating, Ireland will be closing most stores, bars, and restaurants to prevent the spread of the coronavirus. Moments ago, we did hear from IBM, International Business Machines, reporting third quarter revenue that beat analysts' forecasts, driven by gains in its cloud offerings, an area the company will focus on exclusively after spinning off legacy business units. We've got more on IBM's quarter coming up in just a moment with our Anurag Rana. IBM shares, though, they are trading lower after hours by just about 0.6%. It was a down day on Wall Street. Stocks dropped with a spending aid deal proving to be elusive, at least on this Monday. S&P down 56, closing close to the worst level of the day, down 1.6%. The Dow down 410 points, down 1.4%. Nasdaq down 192. That's a drop there of 1.6%. 10-year down 5/30 seconds. 10-year yield 0.76%. Gold up 0.1%, 19.02 the ounce. And West Texas Intermediate crude down 0.6%, $40.63 a barrel. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Really appreciate that. Charlie updating us on IBM. That stock is down about 1% here in the after hours. Let's get into the quarter, a look back and a look forward when it comes to IBM. Anurag Rana is Senior Analyst of Software and IT Services at Bloomberg Intelligence, and he joins us on the phone from Chicago. Anurag, nice to have you here. Now, these guys reported some preliminary numbers. So was there anything really surprising, shocking here?
Not yet. I think the call will have a lot more details about the individual subsegments, but we already knew about what the numbers are going to be back a few days ago.
So, Anurag, any guidance from IBM here? Or is it still just too dicey?
I think the big part is, the spin-off decision was a very good one strategically. We think, we want to know on the conference call. The comments would be that we have been looking forward would be about spending patterns from enterprises. We know they held back spending in the last few months because of the virus. We need to know has the mindset changed of companies, whether they want to invest more in new digital products or not. I think that's really what we are looking for at this point.
Yeah, so, I think about, listen, it's all about the cloud. Paul and I talk about it. We talk about it a lot on air. Are they being as successful as they had hoped in cloud? Are the growth numbers, the projections, and then the realities, Anurag, kind of playing out how you had hoped or projected?
So I think So if you think about it from IBM's point of view, 2 years ago, they went and bought Red Hat. Mm-hmm. And frankly speaking, we think that number's been very good. The Red Hat growth rate has remained very strong for that time. In fact, even this quarter, Red Hat grew 16% in adjusting for currency, which is a very good number in this environment. But, that's a very small business of the total pie, and that's because of IBM's legacy businesses. Yeah. So the second big move that came out from them was making a decision that, by the end of next year, they're going to spin off a large $20+ billion business into a different company. And I think even, only after post that, we could see the potential for growth to come back. I think that's the part that investors may not be liking as much, that the growth rate is going to be in the midterm, and which means 2021 also is going to be a bit iffy as it comes to a total growth rate of the company, which is to be honest, it's fine. There's nothing wrong in it. Just because you could see at least the CEO is making some efforts to clean up such a big company. It's not easy to do that, frankly.
Well, that's what I was, when you said legacy, I thought, there's a lot of companies, you certainly see it on the consumer product side, where companies are looking at their brands and just saying, okay, we got to get rid of this, we got to get rid of this, we got to get rid of this. Is it really time for a significant reboot? And I know they've kind of been doing it, I feel like, a little bit, or a lot, IBM, but even more so that it's just time to shed certain businesses and really just focus on a core where the growth is?
See, I wish it was that easy to do just, from a financial point of view, because remember, even though some of these are legacy businesses and maybe just, not growing or declining at low single digits, but they still bring in a lot of free cash flow. And that's important for you to invest in the future. And if somebody is only going to say, well, get rid of, 40, 50% of their revenue, that's just not sensible, frankly, because you have to do a mix of both. You need to keep those older businesses because they provide free cash flow, and then you need to invest that. I think it's, IBM is in a very tough spot because it's a company that pays a lot of dividends. So, it has dividend investors. It's not as if like other cloud companies that doesn't pay any dividends. So, it's not an easy thing for IBM to do. But so far, what we have seen in the last 2 years, that they have been, I say, strategic sound moves that we haven't seen in the administration before that, or the management team before that.
Hey, Anurag, just give us a sense, since they are focusing on the cloud so much, how is their competitive position vis-a-vis Amazon, Alphabet?
So one of the most important things, Paul, is they really don't compete head-on-head with any of those vendors. I mean, they have a small public cloud offering, but that's not really the business proposition. The business proposition is they have a history of working with the Fortune 500 companies for a very long period of time. So let's say you have Pepsi's or Coca-Cola or one of the banks, and those companies want to...
We lost. Anurag, are you there? Wow. I hope he's okay, because, man, either the dog, grabbed the phone or something. I do hope he's okay, like he didn't fall or something.
But it's interesting that, the stock's trading down a little bit today. So I think there's a lot to prove there for IBM investors. I think that probably, as Anurag was suggesting, it's the right move strategically to spin off, kind of their legacy businesses and focus on the cloud. But, I think there's a lot in the execution that investors are probably going to take a wait-and-see attitude.
Yeah, but, I mean, they've been trying to shift it for a while, right? I mean, in terms of execution and, they've become much more of a services company. But, he did point out, Paul, that dividend, I mean, that gross yield of 5.2%. Yeah. I mean, it's a, it does, for investors, it's the stock's down 6%, but if you look at the dividend yield, that is something decent, certainly in a low-rate environment. All right, IBM certainly one of the names everybody will be keeping an eye on tomorrow. Stock's down just about 0.9% at 125.52 in the after hours. Coming up, one of my favorite people to talk to when it comes to politics, Jeannie Zaino, Bloomberg contributor. She understands what's going on the campaign trail, so we'll throw the day's headlines at her and see where we are going just about 2 weeks away from that vote. You're listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, everybody, we are just about 2 weeks out. Not just about, we are 2 weeks out, 14 days until the November presidential election. And we're going to get the lowdown from Jeannie Zaino. She's Bloomberg News political contributor, Iona College professor of political science. So see what she's seeing as we get closer, because we know some of those trends, Paul, can change as we get closer to Election Day.
Yes, we saw that most clearly in 2016 and most recently there. But the polls here continue to show former Vice President Biden with a pretty sizable lead.
All right, we'll get to her in just a moment. Let's get back to Charlie Pellet. Hey, Charlie.
Hello there, Carol Master. IBM shares lower now by 1%. It reported third quarter revenue that did beat analyst forecasts, driven by gains in its cloud offerings, an area the company will focus on exclusively after spinning off legacy business units. Intel said to be nearing a deal to sell its NAND unit to South Korea's SK Hynix for about $10 billion. This is according to the Wall Street Journal, which says a deal is near. That unit, by the way, makes flash memory for computers and other devices. Intel, along with other chip makers, had an up day today. Intel shares up just about 0.8%. Micron was up by 2%. Western Digital surging today by 7.9%. Down day for the U.S. equity markets. Stimulus concerns front and center again, with the S&P slumping 56 points, down 1.6%. The Dow down 410, down 1.4%. NASDAQ down 192, lower by 1.7%. 10-year down 7/30 seconds. 10-year yield 0.76%. Gold up 0.2%, 19.03 the ounce. And West Texas Intermediate crude down 0.4%, $40.71 a barrel on WTI. There is a bit of good news for beaten down airline stocks. Passenger numbers showing signs of recovering amid the coronavirus pandemic. Yesterday, airport security checkpoints processed just over 1 million people, first time above 1 million in 7 months. That number, however, is 39.6% of the equivalent day 1 year ago, back in 2019. Checking some of the airline names today: UAL surging 3.9%, American up 0.8%, Delta up 0.1%, Southwest up by 0.4%, and Spirit Airlines up today by 1.4%. Recapping stocks lower: S&P down 56, a drop of 1.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
So we're just about 2 weeks, yep, indeed 14 days to be exact, until the November presidential election. Early in-person voting begins today in Florida. It's a key battleground state, and we've got another virus stimulus package perhaps getting in at the 11th hour, but it is really a lot of back and forth there. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino, is back with us. One of our favorite guests when it comes to talking about the election and the campaign. She's with us once again on the phone from New Rochelle, New York. So, Jeannie, it is so good to have you here with us. I cannot believe, I kind of can't get my head around that it's just 14 days away.
Yeah, it's hard to believe, and so much has happened, as you mentioned, almost every day, but certainly already today, and this is a week where we potentially may see another stimulus bill. We don't know. The House Speaker has put a deadline on that of tomorrow, followed by another presidential debate, potentially again. Yeah. And then, of course, you know, you have candidates crisscrossing the country with their surrogates all over the country, particularly in these swing states, where, as you mentioned, voters, you know, we talk about election day, at least I always have, but now it's like election season because we've already had 26 million people vote by many counts.
We talk about the holiday creep when it comes to retail. This is the election creep. It just gets sooner and sooner.
Carol, I'm going to steal that, Carol.
You can steal it.
Great point.
So, Jeannie, you know, I'm wondering, you know, for most of us, the number one issue is the pandemic. How do you think President Trump and his team, with 2 weeks to go, are trying to position their administration as it relates to the pandemic? I mean, I just see him, you know, Dr. Fauci was on 60 Minutes last night, and now President Trump kind of lumps him in and calls him, a bunch of idiots, including Dr. Fauci. I'm just wondering, is there any strategy about how to position his campaign and presidency vis-a-vis the pandemic?
Yeah, it's, I think we're all watching. Last night, as Fauci, as you mentioned in 60 Minutes, came out, and then today the president hit back hard, both on Twitter, both on a call with the campaign, and then on the trail, he has hit back hard on Dr. Fauci and other scientists. And to your point, it's really mind-boggling to imagine how he thinks this is helping him. I was struck this weekend. We heard Chris Christie, amongst others, Republicans just begging the president to focus on the economy because, of course, we had the Gallup poll out last week, which said, I thought it was a great number for the president. Over 50% of Americans saying they're better off now than they were 4 years ago. That's what you want as an incumbent. He should be talking about that, promising to bring us back out of this, self-imposed shutdown, the pandemic, and yet he's attacking, one of the most beloved figures in the country, Dr. Fauci. So, to your point, I can't explain the strategy, except I think this is what has got Republicans awfully frightened. He's got to stay on message. He's right, he needs to get his base out, but in order to win in these swing states, he's got to also appeal to moderates, for whom that kind of language makes them very uncomfortable.
So our Bloomberg News team was able to be on a call with President Trump, and he was talking with his campaign staffers, and he admitted that he thought he was going to lose the election 2 to 3 weeks ago. He no longer believes that, apparently. Jeannie, do you agree with him? And do we, as voters, need to be not complacent because the election isn't over yet and it could still go either way?
It could really still go either way. And I think, there are positive signs on both sides, quite frankly. We've heard a lot about the positive signs on the Biden side, from the money they've raised, which has been outstanding, to the polls, which show them far ahead nationally and, ahead or within a margin of error in some of these battleground states. But there are signs on the other side. And just to give you an example, Republican registration, that went up at the same time that Democrats were more holding back because of the COVID pandemic. And while we've had a lot of early voting on the Democratic side, and those numbers look good for Democrats, that can be overcome by a surge to the polls on Election Day by Republicans who don't feel comfortable voting early. So, there are signs on both sides. Another sign I thought is fascinating that we've heard Republicans talk about is Donald Trump's in-person attendance at his rallies in a pandemic has rivaled that of 2016. Wow. That's energy that you cannot forget. I have to tell you just quickly, I'm in Westchester, New York, which is a blue county, and yet there was a parade of Trump supporters this weekend that got a lot of notice here. And I'm sure we're not alone and we're not a battleground state, but there is energy on the Republican side that Democrats have to pay attention to.
I know that area, and you also see it on the water, where it's really pretty wild. Jeannie, sit tight. We have to do a little bit of news, and we'll come back and continue with Jeannie Zaino, political contributor at Bloomberg News, professor of political science at Iona College. I do want to mention a headline, and it looks like this might be a new one. Mitch McConnell saying the Senate will vote on virus relief this week, but we'll look for a little bit more on that and some clarification. All right, let's get to world and national news headlines for that. Over to Ed Baxter in San Francisco. Hey, Ed.
Yeah, hey, Carol, we'll work on that as well. A major focus today in New York State and California on vaccine distribution.
Administering a vaccine is going to make testing look simple.
Yeah, Andrew Cuomo saying the lack of credibility now in the Trump administration, even the CDC and FDA, is even more daunting. So California Governor Gavin Newsom says the state is going full ahead with preparation for a COVID-19 vaccine, independent monitoring of the federal government, and distribution independently. He says the framework is already in the state.
Well-established partners at the grassroots level, well-established protocols, information gathering, confidentiality agreements, and the like. Just giving you a sense that the experience with vaccinations is well established here in the state of California.
Yeah, he says, try to imagine keeping vials cooled to 20 degrees below Celsius. He says a very unique challenge. A challenge complicated by Donald Trump's repudiation of science totally today on a call with staff this morning, calling the scientists idiots.
Fauci's a disaster. I mean, this guy, if I listen to him, we'd have 500,000 deaths.
And
every time he goes on television, there's always a bomb, but there's a bigger bomb if you fire him.
Chicago Mayor Lori Lightfoot says the city is in a deep and steep second surge.
We don't see a dramatic turnaround in our numbers and soon then we will not hesitate to take the steps that are necessary to save our city, to save our residents.
Meanwhile, global coronavirus cases have exceeded 40 million down, with the pandemic showing no signs of slowing anywhere around the globe. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, Mr. Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Paul Sweeney, and we are seeing a story just across the Bloomberg terminal. Senate Majority Leader Mitch McConnell speaking on the Senate floor, and this has to do with the Supreme Court nomination, but also saying that Tuesday, Wednesday, indeed, there will be a vote on stimulus, more virus stimulus. And, you know, safe to say, Paul, this has been something that investors and the financial markets have focused on very closely. Fed members have focused on saying that there needs to be more stimulus from policymakers to help out those that are really feeling it hard because of the virus. So Nancy Pelosi, who's going to be talking with David Weston tomorrow in the 12 o'clock hour, had said, tomorrow's the deadline, folks, if you want to get something done.
Yeah, that's interesting. She really put the kind of the line in the sand here, I think. And on again, off again. It's not by the day anymore. It's kind of by the hour and by the headline. And the most recent headline, as you were mentioning, is positive, is constructive. And you think about it in a political year. And not being a political scientist myself, but you just can't imagine a politician not passing a spending bill during an election year.
We were just talking with Jeannie Zaino,
Yes.
about the recent Gallup poll, 50% of Americans saying that they are better than they were in 2016. I mean, we all know the slogan. We've heard it so many times. It's the economy, stupid. Like, that's what matters when people go to the polls.
It really does. Now, I mean, now we are in extraordinary times here with the pandemic, and that's affecting people in many different ways and on many different levels. Some not that much. Some obviously paying the ultimate price, and that's going to impact turnout. That's going to impact maybe issues, how people view issues, what context they put issues in. But it just seems like there is something that is needed, and that is continued fiscal stimulus,
right?
To along with what we already got from the Fed.
You talk about line in the sand. There's still a dividing line between the two sides when it comes to state and local authorities providing assistance there, tax credits that Democrats want for lower income families. So there's still some things to be worked out. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. IBM shares lower after earnings. IBM did report third-quarter revenue that beat analyst forecasts, driven by gains in its cloud offerings, an area the company will focus on exclusively after spinning off legacy business units. IBM shares down now by about 0.7%. It was a down day on Wall Street. Stocks fell to the lowest in almost 2 weeks as Congress remained apart on a fresh government spending bill, denting hopes for a breakthrough before the election. Today, the S&P 500 index dropped 56 points, down 1.6%. The Dow down 410, down 1.4%. Nasdaq down 192 points, down 1.7%. 10-year down 7/30 seconds. 10-year yield 0.77%. Gold up 0.2%, 19.03 the ounce. And West Texas Intermediate crude down 0.5%, 40.69 a barrel. Recapping stocks lower. S&P down 56, down 1.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get back to Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino. She's with us on the phone from New Rochelle, New York, up in Westchester. So, Jeannie, here we are. Paul and I just broke down this story that Mitch McConnell seems to say, okay, we are going to get a vote on stimulus. We keep talking about these October surprises that keep coming at us. How might this impact the outcome of the election, if at all, especially when there's been so much early voting?
Yeah, and McConnell said on Saturday, and now I guess you're reporting he has repeated that he would bring a deal to the floor, which of course makes sense. I think even if we get a deal between Pelosi and Mnuchin and that is brought to the floor, I think it's not just about Mitch McConnell. He has some Republicans there who are skittish on the idea of this massive spending bill, even though many economists and people on Wall Street and in the United States think it's necessary. So I don't know that he gets them to go along with it, meaning his own party, and that's going to be the problem for Mitch McConnell. Unless he's able to bring some kind of skinnier bill, which of course then the Democrats are not going to support in the House. So, either way, I think he's going to face some issues, and I think part of the reason that he's facing these issues is because Republicans increasingly feel that things are not looking good for the president, and they're worried about their own political futures and also what it means for the Republican Party going forward if they become a party that signed on to a massive spending bill. And so I think all of those things are sort of complicating this, but I do think it would be important to get a deal. It is astonishing to me we've been in this position without a deal this long.
Crazy.
And I heard, I think it was Paul was saying before, what's all the more astonishing is that you would think political officials and people campaigning would want to spend because this is an attractive thing for voters, and yet you had the president walk away from the table, come back, and you have Republicans who don't want to do it.
Jeannie, I'm going to ask, maybe we'll look a little bit down the road here. If President Trump were to lose this election, a year from now, would you consider the Republican Party what it is today, the party of Trump?
I think it's a great question, and I don't know if we know the answer, but I think it's something that many Republicans are thinking about as they want the president to win, but think that they may have an issue there. I think it's going to depend. They have lost a lot of seats, Republicans have, not just in the House, where they famously lost a lot in 2018, but you look at the state and local level, those benches are slimmer and slimmer. That's a problem for the Republican Party. You couple that with the fact that on issues like spending, which we were just talking about, or foreign policy, there is a huge divide between Republicans on those issues. So I think they're going to need to realign and come back together and figure out who they're going to be going forward in a post-Trump era, if you will. And again, that's a big if because he may very well be reelected on November 3rd.
It's interesting. I'm listening to you talk about them losing seats, and it's a really good point. Where they've gained seats, though, is the Supreme Court. And I do wonder if all along this is what it's been all about, that Republicans kind of held their nose because they now have a majority on the Supreme Court.
Yeah, they have a majority on the Supreme Court and, of course, importantly, at the appellate and the district level, where the president has done a really good job and probably from Republicans doesn't get enough credit for. getting that many people to the federal bench. And of course, those people serve for life. So long after whoever is elected in 2020 is left office, they will still be there. And it's going to be a juggernaut for Republicans, and Democrats are going to have to contend with that, or liberals. And I do think, to your point, this is what it has been about for a lot of Republicans since Roe v. Wade, since the early 70s. It's taken them this long, and they're on the cusp of taking the Supreme Court in a concerted way, and they won't give it up easily, which makes this question that Biden keeps being asked about packing the court that much more relevant. And I think we really do deserve an answer that we haven't gotten from Biden on that.
Do you think that is something that the Democratic Party would support?
I think he's going to get a lot of push to move in that direction from progressives in the party, and I think more traditional moderate Democrats are not going to support it. I think that includes Joe Biden, by the way. So I think that it's going to be interesting to see how he sort of walks this fine line between this energetic left, which he doesn't want to offend, and his own kind of predilection to be more moderate on these questions. I don't think this is something he would have ever supported, but I think now he's reluctant to make that case given how much support there is for that. If she's confirmed, which I suspect she will be soon, I think he'll come out and say he would support or consider supporting that after he's elected, if he's elected.
So do we get another debate this week? Are you expecting it? And what will it be? And how important is it?
I am so excited for it. I'm hoping.
Me too.
So I'm probably biased, completely biased. I'm hoping we get a debate. We've already heard the president and his team attacking Kristen Welker from NBC or MSNBC, who's going to be moderating the debate. We had the debate commission meeting today to see about the rules. As much as I hope we're going to have one, and it's in the president's interest to have one because he's behind in the polls, there's always the possibility he pulls out again. I don't suspect Joe Biden would at this point, but I think it's going to be fascinating to see how the president handles this. He has, an interest in not repeating what he did last time poll-wise, and yet he can't seem to stop. I mean, you hear him on that call today.
Yeah.
The attack on Fauci doesn't make much electoral sense given where he is, and yet he continues. So I think it's going to be great TV and radio. I don't know if it's going to help Trump unless he really curbs himself.
For former Vice President Biden, do you expect him to simply, over the next 2 weeks, stay the course, if you will, Jeannie, in terms of just not make any mistakes?
That's what he has to try to do, is not make any mistakes, although I worry. When I looked Saturday and you had President Trump crisscrossing the country with those big rallies, and Joe Biden did not have an event on Saturday. He did on Sunday. That, to me, is a sort of warning sign. You saw some of that complacency, I think, in 2016 with Hillary Clinton, and Democrats are trying to avoid that. But, the vice president can be focusing on debate preparation, all those things. He's got to not make any mistakes, but he's also got to not take for granted that this lead is what we're being told. Because in these swing states, again, there are some big question marks. And, how do we make these predictions on polls and what's going to happen, but based on the past? And we've never had an election like this in the midst of a pandemic, given this situation. So all of the forecasting is a little bit in the dark, or a lot in the dark, given we've never had a situation like this. So I think Biden and the team have to be very careful they don't become complacent and sort of rest on their laurels. I don't think they are, but I think they have to be careful of that.
What a great time to be a professor of political science, Jeannie.
It's so fun, and I get to talk to you guys, which is the best part.
We love. I want to be your student. Jeannie, thank you so much. Bloomberg News political contributor and Iona College professor of political science, Jeannie Zaino. We always say, Paul, when it's a nice day, it's kind of not so nice today, but it's like, can we just have class outside and just have Jeannie teach us, for hours and hours and hours, because it is unbelievable. You just can't make it up in terms of the political year it's been, and we ain't over yet, that's for sure. All right, coming up, we're going to shift gears a little bit and talk about something I've been talking about a lot today, and that is the global real estate market and actually making a difference. So we'll get into that with Don Peebles. He's back. This is Bloomberg.